trade fundamentals news releases. Now, on the right side, we have the economic calendar, and on the left side, we have our charting platform, okay? And what we're going to be doing is looking at the different types of news releases that we can trade, and we are going to look at the reaction in the markets, okay? And like I was telling you before, there's three main kinds of news releases that I like to trade. Now, the first one is job numbers, all right, or job data. And you can look at well, the non-farm payrolls, for example, which are the jobs added to the economy each month, and you can look at jobless claims. And the second type of release or a news release that I trade is in inflation numbers. All right. The third is the economic, the monetary policies data. All right, the data that is released by the decisions that are released by central banks. Now we're going to go and we're going to actually filter this out, and we're going to look at the entire month of March. Now, if you have any questions, just type it on the chat, and I'll get to it as soon as I see it popping up. So we're going to go on the last month. All right, we're going to wait for the economic calendar to load, and we're going to currencies: euro, the pound, and the US dollar. Now, let's take a look, and let's look at well, let me filter out every other currency, because if I don't we are going to have a very cluttered economic calendar. So we're going to look at the euro, the pound, and the US dollar. All right, apply filters. And if you attended the webinar that I hosted last week, we talked a little bit about this. All right, we did talk about how to get a bias out of economic releases, but now we are going to actually look into how we can trade them. All right, how we can profit from them. And what we're going to be doing is we're going to go and look at the important releases, first of all, on the dollar, on the pound, and on the euro. And we are going to look at the charts so you can see how the market moves, how much the market moves, meaning that how much can you expect to make per trade or per release, and where the entries should have been and where you should have taken profits. Because remember that these are these are news releases, which means that the moves are very short-lived, because they are momentum trades. All right, I'm going to add the volume on the charts too, because you're going to see that right before the announcement the volume decreases a lot, and when the data hits the wires, well, there's when the volume comes into the market and we have the move. All right, so we're going to go look at for example, let's try the first non-farm payrolls change, all right, on the US dollar. So we're going to go back, we're going to look at the euro US dollar on Friday, March the 8th. And to do that, we're going to go to the 4-hour chart, just to locate it on the charts, right? That's on March the 8th. And let's try to locate March the 8th. And here we go. That's the 7th. And here is the 8th. All right. So what we're going to be doing is look at the euro US dollar. All right, during this release, and we're going to look at the hourly, and then on the 50 minutes, I'm doing page by base, because I don't want to lose myself in the charts. So I did lose myself in the charts. And if anybody has any idea how to go to a select uh, a specific date on the trading view, you can just tell me um, on the chat. All right, so let's go back. Let's go back 8th of March because I'm going to do this manually. All right, March 8th. Here we go. No, this is March 8th, right here. So we had the non-farm payrolls and the unemployment rate. Now, we had it at 9:30 in the morning, and the clock on the economic calendar and the clock on my chart are synced. So we need to find March the 8th at that time. And actually, we didn't have. I mean, this is Friday, March the 8th, and I cannot find where is that we had that release. So let's move forward. And let's look at the pound on March 12th. We had the GDP and the manufacturing production month over month and the CPI month over month on the United States. All right. So we're going to put the pound versus the dollar on the top chart, GBP USD, and we're going to look at the Euro US dollar on the bottom chart. All right. So we have the volume here on the British pound against the US dollar. I think I'm going to just keep one chart. Well, it's fine. And then we're going to go back to March 12th. All right. And we're going to go to the hourly chart so we can do this faster. We're going to go on March 12th. So basically, first of all, when we look at the GDP, if the value comes or the number comes higher than expected and higher than last month, this is going to bring a bullish momentum into the pound. Now, the CPI or the consumer price index is the main is the main data inflation analytic, right? And if the number comes higher than expected, well, this is going to bring a bullish momentum in the US dollar. All right. So basically, what we're going to do is we're going to go to March 12th on the British pound. All right, March 12th on the British pound. Here we go. And we had at 5:30 the GDP coming at 0.5%. And here we go, March 12th at 5 a.m. We had the read. So I'm going to be using a vertical line right here on the pound against the dollar. And right here we had the GDP month over month coming at 0.5%, and the manufacturing month over month coming at 0.8%. Now, I'm going to go ahead and um, look at what really happened here, because we had a previous number of minus 0.4%, and we had a consensus of 0.2%, and when the news hit the wire, we had a 0.5%. All right. And right here, what should have happened is we should have had a sword on the British pound against the U.S. dollar, but the British pound against the U.S. dollar actually crashed for about 180 pips. Now, this is not due to the GDP month over month, but this is due to the Brexit votes and the Brexit talks, which had been moving the pound a lot. Now, and look what happened on Brexit during March March the 12th, but we are going to stick to the economic calendar. All right. So on March 12th, we had the U.S. dollar, the U.S. CPI, and the core CPI month over month. So basically, we're going to go here to the euro US dollar. Actually, we're going to go to the DXY, which is the US dollar index, which is a much better output for the US dollar when we are analyzing the markets. And we're going to go to March 12th, right here. And you can see that we did had a push up on the US dollar index right here. So let me just grab that horizontal line right here. And we're going to go to the 50-minute chart. All right. So you can see where the trade should have been taken. Now, let me just go back again to March 12th. Sorry about this, guys, but um, it is much easier to do it this on the MT4, and actually I should have done it on my MT4 platform. Uh, Actually, I'm going to open. If you bear with me, I'm going to open my MT4 platform, and just going to do this on the MT4. So if you have any questions, I'm ready for you while my MT4 loads. All right, it'll be just a second. All right, here we go. All right, here we go. Now, this is just downloaded this MT4, so I haven't had the time. The time to mess with the uh, the interface. So I'm going to use the default one. All right, here we go. Here we go. That's more like it. All right. So let me just delete this indicator and let's move on. Let's use some candlesticks and let's take the euro US dollar. Or what are we looking for? Yeah, the euro US dollar on March the 12th. March 12th. All right. So right here we had the all right. Hold on just a second. Let me just log in into my account. That should be it. Nope. All right. Just bear with me, guys. Well, I'm going to have to use for this webinar again. TradingView, it's fine. We're going to use just one chart to be looking at the economic calendar and the releases. Again, I apologize for the delay, but it should be fine right now. Okay. All right. So let's go and let's have a look at the charts. Just let me log in on my TradingView. So let me just log into my TradingView and we can continue this webinar. Okay, here we go. All right, so let's continue and let's have a look at. Well, let's continue uh, on the GDP on the Great Britain pound. And for example, we can look at the Brexit vote. But actually, I mean, if we start looking at the Brexit vote, we are going to get in the middle of something that doesn't happen very often. And actually, right now, well, the Brexit votes really don't have any. Well, they do, but they don't have as much weight on the pound as they did before, or as the first Brexit votes did, because of the uncertainty of the whole Brexit right now. So let's have a look and let's continue with the economic calendar. All right. And let's look at the federal funds rate. All right. Now the federal funds rate is the interest rate at which the Federal Reserve um, lends money to commercial banks overnight. All right. So one of the main ingredients in quantitative easing is to maintain the interest rate or the federal funds rate near zero, because that way that way commercial banks have access to cheap money. So they have more liquidity, so they can lend more money, and thus insert it into the economy without having to print extra money. All right. And because that has such a inflationary virtue on the economy, that it is not possible to do. So basically, on Wednesday the 20th, we had the federal funds rate decision, and the decision was that they were going to maintain the interest rate at 2.5%. Now, this is very interesting because this is a dovish mood not to hike the interest rate, given that the last quarter of 28, or the last quarter of last year, the outlook of hikes was to have no less than two hikes this year, and we were expecting the first hike to be on the first quarter of this year. But actually, when this decision came out, the FOMC economic projections were very dovish, and the rate hike outlook was moved from at least two this year to zero this year, and only one in 2020. So this decision, I mean, if you read the economic release, or if you read into the news release, you can see. I mean, you can understand that the Fed's outlook on the economy has changed, right? And it has worsened because they feel the need to maintain the federal funds rate near zero, because they don't see the economy being able to sustain itself. So this is very dovish, and this makes for a very bearish move on the US dollar. So I'm going to show you on the euro US dollar, because I mean, if I show you on the US dollar index, I mean, you're going to see the move, but you're not going to be trading the US dollar index. You're going to be trading the euro US dollar. So let's have a look at the euro US dollar. And this was not long ago. This was on March the 20th. And let's just take one chart. It's enough, right? So March the 20th, we're going to look at the euro US dollar, the hourly. And here we go. March the 20th, right here, we had a surge on the euro US dollar. Now, what I mean when we are going to be trading economic releases and news releases, all right? Now, the euro against the US dollar. If the US dollar drops in value, the euro against the US dollar is going to increase in value. So if you want to trade this release, for example, the FOMC statement, or the FOMC economic projection and the federal funds rate decision, and do you want to trade it in by using the euro US dollar, you have to know that if if the economic or the FOMC statement and the economic outlook comes very dovish, you are going to want to sell the dollar because it's going to be bring a very bearish momentum in the US dollar. But if you want to sell the US dollar, you are going to want to buy the euro against the dollar, right? And what you need to do, for example, if you take a look, the euro and against the US dollar was trading inside a very tight range, all right? So the first thing you have to do is take a look at that range, all right? Where's the top of the range? Where's the bottom of the range? And right here, the top of the range was here at this level, right? And the bottom of the range was right here around these levels, all right? So that was the bottom at the top of the range pre the economic release. And always, and when we have when we have important releases or important economic releases on the economic calendar, this is what happens. I mean, the currencies in play are going to be inside a very tight range because traders are going to be waiting for that release. And as you can see, we were trading inside a 25 pip range, and that is untradeable. All right, it is untradeable. But when the news hit the wires, the euro against the dollar moved up about 80 pips. All right, it moved up about 80 pips. So if you have that your SQUAC service, right, and when you hear that they're going to maintain the federal fund rates at 2.5 and they have changed their hike outlook to none this year, you're going to buy the euro against the USD. You're going to put your stops below the previous low. Now, where are you going to be taking profits? Well, that's easy. We are just going to go ahead and zoom out to look at the actual resistance levels that might be in play right here. And we have one, which is the previous high right here that we broke with completely. And if we go to the 4-hour chart, you can see that well, it is around that. Yeah, I mean, we have another level right here at these lows where we hit. And let's go back to the 1-hour chart. All right. So you have to look at the previous highs and the previous lows, the previous bases where that price rejected, because when you get in momentum trades, that is where you are going to find profit taking from momentum traders. And when momentum traders start to take profit, well, the impulse starts to slow down. Now let's go back to the hourly, to where we were looking, and as you can see, it's right around these levels that the momentum started to decay. So what I would have done is I would have taken my gains or my profits right around the 1420 level, and that would have given me a cool a cool 56 pips on this news release. And well, what's important about news releases, right? Is that it is not a trade. I mean, it is not a trade and hold kind of trade. It is just profiting from the momentum that or the volume that in the markets. Because if you take a look at the volume at that volume increase when the news hit the wires, this is when to actually be making money. Because after that, when momentum dies, guys, you can't expect that you're going to have a continuation on the move that you're trading, because let's face it, momentum is dying because volume is thinning out. So this is one very good example on how to trade the news. So let's go ahead and let's continue, and let's watch. Let's see if we can hit another one on the US dollar. right? So, well, we have one here on the retail sales on the G on the GBP, and we also had the uh, official bank rate votes, which is basically the same, the interest rate on the UK. So let's change the chart to a GBP Japanese GBP. I'm sorry, GBP USD. All right. And let's go to March 21st, guys. March 21st is when we had this news release, and I think that this news release was around 8 a.m. So it was around this right here, this drop. All right, so this is where when the news hit the wire, but this is a very much difficult move to trade because we were looking at the 1 hour chart, and we were definitely moving to the downside, guys. But we had no clear, area of or range pre the release of this news, so it was very difficult, in my opinion, to trade this release based on levels that would have broken because we didn't have a pre-existing range before the news hit the wires. But nevertheless, when the news hit the wires, and they held the official bank rate, the pound moved down 100 pips or so against the dollar. Now, because this webinar is called trading the news on how to trade fundamental news releases, I am going to be showing you setups that I would have traded and setups that I would have avoided. For example, this one I would have avoided because in my opinion it is a high risk trade because we don't have a pre-existing range in the pound pre or before the release. Continue, let's move forward, guys. For example, let's look at I don't know here. Well, let's look at what has happened this week so far. This should be fun. What has happened this week so far? I think we've had a couple of releases. Yep, we've had the U.S. dollar core retail sales and the retail sales coming out. Well, of the U.S. of course. So let's go and look at the euro U.S. dollar. Right. So here's the euro U.S. dollar, and we are going to be looking at the. Let's just get rid of these horizontal lines, and let's go back to the end of this chart. All right. Now, so we had the on Monday the core retail sales on the US dollar at around 8:30 a.m. So here we go. This is the drop on the euro, but if the US dollar was hit in the bearish side, the euro against the US dollar would have moved up. And this is what happens when you are just trading based on the news. All right, you might get trapped in a move on the wrong side of the market. Now at 8:30, we had the core retail sales and the retail sales month over month both, and the ISM manufacturing PMI. Now let me look at manufacturing PMI. Yeah, we had a better than previous ISM manufacturing PMI. So this means that we had a bullish run on the US dollar, which means that the euro against the dollar was going to drop. Now, if we look at the previous range that the euro against the dollar was trading at, you can see that we had at around the 1228. Let me just put this right here, and we had a high at around these levels. All right, Basically, this was, let me just calculate the range I'm trading in. This was a very thin 20 pip range that we were trading in. All right. Now, when we had the ISM manufacturing PMI coming better, dropping, and we had a better number than last month, we the idea was to buy the dollar, so we wanted to go short the euro against the dollar. Now, this is where trading the news gets interesting, right? Because because we were trading on a bottom. I mean, if I show you, well, yeah, I'm actually going to show you my euro US dollar. Uh, Let me see. Let's load the majors. I'm going to show you my chart of the euro against the dollar. And in my opinion, this was not a good setup to trade. Trading at very low levels on the euro against the dollar. And this is another thing that you need to focus on when you're trading the news. All right. For example, if the ISM manufacturing PMI had dropped with a less uh, or uh, or a worse number than the last number, that would have been a very good trade. Why? Because let's just wait for my euro against the dollar chart to load, and I'm going to show you where the lows of the euro against the dollar were at. All right. So this is my euro US dollar 4-hour chart. Uh, um, Loaded like this. All right. So this is my euro against the US dollar, euro against the US dollar for our chart, and as you can see, we were trading at very low levels, and to short the euro against the dollar at such low levels, to me, is a bad idea. All right, it's a bad trade, and I don't care that I mean the ISM manufacturing PMI came better than expected, or better than the last number, because I am not going to try to sell the euro against the dollar at these levels. Now, if the case were that the ISM manufacturing PMI were or dropped worse than expected, now that would be interesting for me, because what I'm trying to do is I'm trying to buy the euro against the dollar at these levels, but I don't have a setup yet, and maybe that news coming out of the market and maybe that news coming out of the market would be the trigger for a long trade on the euro against the dollar. So basically, go back to the chart that we were looking at, because we were trading in such low levels, the wires, yes, we had a surge in volume, but because we are bottoming, the momentum on the Momo run was not long enough, in my opinion. It was, again, it was a news trade, but I would have not taken it, because it was a risky trade. Now, if the news had came on the other side, I would have definitely taken the trade, because of the prospect, or the possible profits that we can run to the upside. All right. Now, Victor, yes, there will be a recording of this webinar in our YouTube channel as soon as we are done. All right. Now, basically, these are the things that you need to be looking out when you're trading the news. All right. Not only just looking at the chart and listening to the news and just taking the trades blindly, but you need to look at the possible profit that you are going to be making with a Momo trade, and if the risk versus the possible reward is not at least a 1 to 2, I'm not taking that trade. All right. For example, when we saw this, what was that number? I don't remember, but this surge Yeah, I mean, yeah, I remember this was with the federal funds rate and the FOMC economic outlook. I mean, we were trading in a what, a 25 pip range, which means that my risk was going to be 25 pips, and the first target was at 59 pips, which means that uh, my risk versus reward ratio was better than a 1 to 2. So yeah, I would have definitely taken that trade, but I would have never taken this trade on the ISM manufacturing PMI on Monday. All right. Now, anybody have any questions? All right, Nev. The most dependent news to trade are job numbers and inflation numbers. Um, in my opinion, job numbers and inflation numbers are very good to trade because they bring a lot of volume into the market. The setups can be high on the risk to reward ratio basis, and when the data comes out, when the data comes out, it's all about our jobs or it's all about inflation. And sometimes um, we do get some mixed data that's going to make uh, a very uneven move. But most of the times we do get non-mixed are going to be a unilateral move most of the times. So yeah, I would look for job numbers, inflation numbers, and yeah, and uh, FOMT, I'm sorry, central banks releases. All right, how long should you stay in a trade after getting into the news? Well, let's go ahead and let's have a look at the trade that we were looking at, this one right here, and let's look at the 5 minute chart, guys. It's not very long at all. It's not very long. So, Jesus, where should I didn't put. Let me just put a vertical line, because if not, I'm going to be completely lost in my charts. All right. So here we go. This is the hourly, and we're going to go to the 15 minutes first, and then to the 5 minutes, if you don't mind. All right. So I think it's right here. All right. So this is the 50-minute chart. Let's say on the 50-minute chart, guys. All right. So when the news hit the wire, all right, it was right here on this candle, on this big, huge candle. And if you look at it, it's a 50-minute candle, and that 50-minute candle hit my target. I mean, when you're trading the news, it's not about how long you're going to be staying in your trade. It's about this. All right. When you're trading the news, it's all about this volume right here. When you look and when you start to see that the volume starts to increase, just like it increased right here, boom, you are most certain that your trade is over. All right. So when you see that this, because just take a look, guys. When the volumes, started to decrease, we started to trade inside this very narrow range. All right. Momentum was gone. The trade was gone. And you had to take your profits up here. Now, just take a look what happened after that. All right. We went all the way up to the 1445 level right here. And should you had stayed on the trade because you thought with such a strong move to the upside, you would have with such strong move to the upside, you would think that the move was going to continue to the upside, I mean, that's just wishful thinking, and that's not the way to trade. What happens, and just then we went all the way up here, and then all the way down to our entry, right? So people that stayed on the trade because they thought that they were going to be greedy to get more money out of the market, and never thought about the decreasing volume. Well, the market ate all of their profits and some. So yeah, how long should you stay in a trade or in a news based trade? Is It's dependent on the volume, all right? Volume hits the market, you got your targets. You already calculated your targets, right? You might take half of it at your targets, move your stops to break even. You're focusing on your charts, but when you see your volume start to decrease, boom, you close that trade and you don't look back. All right? Why? Because this is just a move made by an increase in volume. This is just momentum. This is just momentum. We are not trading levels. We are not trading global macro. This is pure momentum, and this is how you trade it. Always look for that range to be. I mean, that range before the news, and place yourself on the good side of the trade when the news is released, and be aware of momentum. Now, do you have any more questions? And if you don't have any more questions, well, we're going to end up this webinar, and I thank you a lot for coming. And guys, if you are not premium members, let me just remind you that I'm giving you a trial for $1, and you can try our services for $1. The Signal community, nano diplomas, all of it for a month for just $1. And by doing it, I mean, you have to go to. Let me just give you. I'm going to give you the exact. Um, well, you have to go to tradimo.com and then click on Go Premium and choose the monthly package. And when you choose the monthly package, enter this voucher, Tradimo FX1. Just put it on the chat. You put that voucher on the checkout, and it will discount you the entire. It will discount you $48 out of the $49 for 1 month. So you can actually join us in our Signal community, in our premium community, and I mean, if you're trading at least part time, don't trade alone. I mean, it's much better to trade with experienced traders and in a community where traders are improving day by day than trading alone. I mean, I made all the mistakes. I know how hard this is. It's just $1, and you get access to me every single day. All right, guys. Now, if there's no more questions, it was very nice having you here. I'm sorry for the little glitch at the middle of the webinar, but I'll see you guys next time. Goodbye.